Hi guys, good day everyone. I hope everyone is okay. I hope everyone is safe, well, and having a good day. And I hope you already collected some pips by this time if you're watching this video. If you haven't, maybe after this video it will help you to collect some. I'm not saying that I'm better than your mentor. I'm just saying that maybe the information that I'll share here, it will help you. You'll be profitable in your next setup. And again, I would like to ask you to subscribe to my channel. And if you haven't done that, please do subscribe and feel free to leave any comment in the comment sections below. If you're not impressed with the video, please do say so. And if you are impressed, also do say so. Okay. So with that said, my name is Njabulo. I want to show you something on V75. I want to show you the secret of order block and the secret of accumulation phase. Okay. Uh, what you looking at? What you're looking at right now, it's volatility 50, not volatility 75. This is volatility 50. We are going to volatility 75. So I want to show you the secrets of order block and the secrets of accumulation and how you can make some profit in accumulation, or should I say some pips or some money, but it's the same. Whenever you gain pips, automatically you gain money. So with that said, let's go to our V75. In the group, I already sent this thing on daily time frame, and then we'll go down to M15. Okay, so as usual, I always advise everyone to start on a higher time frame, on the highest time frame possible, and then in this instance, when we go to a monthly time frame, we do not have anything clear. Therefore, let's go to our weekly time frame. Okay, the markups are already there. Okay, so on weekly time frame, we already see the break of market structure right here. Yeah, we already see the break of market structure right here. If ever you are trading the market structure, we always know that you trade in the direction where the market broke into. Always trade in the direction where the market broke to, and in this instance, it broke where bearish. Therefore, we have to look forward for sell opportunities. And where is that sell opportunity in this instance? This the last up candle before the change of structure, which was broken down here, and also this is a failure market structure. Therefore, if ever it's a failure of market structure, we highlight this last bullish candle here, and then when we drag our rectangle further, we can see that price came exactly into this candle. It respected it, and then it pushed down. Okay, we are not there yet. Now I just wanted to show you this move on a weekly time frame. So let's delete this. I want to deal with this markup that's already here. Okay, so you already saw, I already showed you that we have a break of market structure, and we always look for the selling opportunities because the structure broke bearish. The structure broke down, so we will look for selling opportunities, and this was our sell opportunity, this candle here. So now let's go to daily time frame. This is where I started to mark everything. We'll spend some time here, a little bit. Okay, so as you see here, okay, let me zoom out just once. We can see again, we look on the left. When we look on the left, we see the equal lows here. I always say, and I will say it again, whenever an order block is respected, then liquidity is formed below or above it. So in this instance, the order block that was respected, it's a bullish order block. This candle here, it has been traded into or respected, whichever terminology that you prefer. This candle are right at the last down candle before the change of direction, uh, or and the structure that got broken, it started to move here, and this is the last bearish candle prior to this new structure. Therefore, it was a bullish order block. So we see price came to respect it here. Therefore, what then do we have? We have tons and tons of liquidity just below it here. So whenever an order block is respected, then liquidity is formed. Hence, we see now this move here. Okay. Um, yeah. Let's put this. Hence, you see this move here. That this is a liquidity rate. This move here traded all the liquidity that was below here, and then price moved up, and then it came down again. But whenever price was going up, what we see another break of market structure right here. Okay, so we see a break of market structure right here, and then what we have here, we have a failure market structure here. Why is this a failure market structure here? Because we have a low, we have a high, and then we have a low again. Not a lower low, not a lower high, not a high low. It's just a low because it is not below the previous low, and and the move above this low didn't take out the high. Therefore, this is just a normal low here. So we have price that came up, failed to take out this high, but took out the previous low. So what then do we have? We have a failure market structure. This is a failure market structure here. So we can still expect price to come and respect this zone here. 1038.99.60 will be our entry if ever price come to or respect this area up here. Okay, so but we are not there now. We are coming here to this mark up here. All right, so as price was going up after it traded all the liquidity below these two this bullish order block here. We have this move that traded all the liquidity, and then price pushed up again. So whenever price was pushing up, it broke the structure. There's a new structure that was formed there, and it is broken just here. So after the structure was broken, what then do we see? We have this higher. This not a higher low. This not a higher high. This is only a high. This can be considered as a higher high when you consider this new structure here. Okay, this can be considered as a higher high when you consider this structure here. But when you consider the previous structure, this is just a high. So we have price rejecting this area here, and then came down here, and then price is going up a little bit. If I zoom in once, I just want to show you something. After price after price came up to this zone here, it pushed down. After it pushed down, what do we see? We see the break of market structure where right here. Okay, we see the break of market structure here. So hence I mark this. Please pay careful attention. Down here we have a bullish order block, and then a break of market structure here, and then we have a bearish order block up here for this break of market structure here. Okay, so we have a break of market structure here for this order block here. So one of the characteristics of order block is that it is 100% valid if it takes out what the opposite order block. It is 100% valid when it takes up what the order block. Do we have an order block that was taken out by this move? Yes, we have. Where this is a break of market structure here, and this candle here is an order block here. This is an order block here. A price was supposed to sell here, but it was violated with this move. Therefore, it guarantees this move down here as 100% bullish order block. Okay, so now we'll take this out. I'm just sharing some heavy stuff here, some heavy content on this channel right now. I don't want to be greedy with some information. So yeah, I'll share with you guys. Okay, so after that, what then we expect still price? As you see, I already have an arrow here. Let me zoom in once. We already have an arrow here. We indicating here that we still expect price to come up and respect this order block here. But the move that is from this order block did not take out any previous order block. Therefore, this anyway, it is still an order block. One of the characteristics of it is that it broke structure. Okay, that's one of the characteristics of this. This bearish order block is that it broke structure here. So if ever price will come up here, then where will be our entry? Our entry will be a 79.5680.75. This will be our entry. Remember, we are still on daily time frame. 79.5680.75, and then our stop loss will be just above 84.1972.44. Our stop loss will be just above that, but this is daily time frame. Therefore, we have to refine everything to our entry time frame, and then whenever this order block is respected, definitely we expect price to come down to this bullish order block. Our entry will be at 56,936.85, and then our stop loss will be just below 51.2787.12. That's where our stop loss will be. Hence you see this red block here, and then our take profit will be just just here where the price returned after it formed this order block. This is where always the take profit is. Okay, so this is on daily time frame. Now let's go down to H4. All right, on H4 we didn't change anything. As you can see here, this is the break of market structure on the daily time frame. So now these candles are expanded because we are on a smaller time frame now. As you can see, again here we have a break of market structure right here. We have a break of market structure right here, and then we have an bearish order block here. And then why is this valid? It's simply because we have this high that failed to take out the previous high, but this move took out what the previous low. Where's the previous low? Is here. This is the previous low here. From here, that was taken out by the move from this area here. So therefore we have this as an order block which is not yet respected, and it might look like price came into it, but price didn't come to it, and I'll show you that on M15. So for now, we have to ignore, or we do not have to look all these things on the left. We just have to ignore it and focus on the current price action. We have to focus on the current price action there. Okay, we have to focus on the current action, and then this high failed to take out the previous high, and it also haven't it haven't take out the previous low as well. Therefore, this is not a failure market structure, this is just a high. It is not a failure market structure, this is just a normal high. Okay, we are on H4. So now let's go down to our entry time frame M15, and I want to show you some interesting stuff here, some very interesting things. Okay, so this is the order block on on H4, which is not traded into all this area here. It is on order block on H4. Let me show you. Yeah, exactly here. As you can see, this candle did not touch this order block, so we do not have to force things and say no, this order block was respected. No, it is not. It was not respected. Therefore, what do we have? We have liquidity just above this candle. Therefore, we still expect price to come up and respect this order block and then push down. But let me entice you with these markups here. If ever your mentor told you that during accumulation do not trade, just wait, and then I'll suggest you refer your mentor to this video. Maybe he or she can change something after that. Let me show you what happened in this accumulation. We see this accumulation phase here. This is the peak and this is the bottom of it. Okay, after all this accumulation happened, price moved up, and then again it another accumulation phase happened here from this low to this peak here. All right, as we can see, price raided the liquidity below this low with this move, and also it raided the liquidity above this low with this move here. Okay, so let's delete this because it is not our focus now. I don't want to confuse you with many errors. Okay, so here's the thing. In this accumulation stage, this is accumulation stage. It's clear it's accumulation stage on M15. So this is what should have happened. I want to be honest with you. I did not trade this as well. I did not see this as I was stuck on H4. So whenever my entry was not triggered, so I came down to M15 and investigate the move that happened and why is my entry not triggered. So this is what I found out. This is what I saw, the accumulation stage where money is again. Okay, after this move here, that after this move from here, we can see from here to up here. Before price came up here, it broke structure right here. Okay, after it broke structure, let's delete this. I don't want to leave a lot of things. After it broke structure, what do we see? We see another blockade, the last bearish candle before the move up. This is the last bearish candle here. Yeah, we'll put it here. In fact, we don't put it here. This is where it ends. So we expected price to come and respect this zone and then move up again, but that did not happen. What then do we see if we extend our rectangle to the right? What do we see? Okay, we cover it up until here. What do you say? This was supposed to be a mitigation block, but it became a breaker block. So instead of buying here, then we had to sell here. Instead of buying here, then we had to sell here, and then where was our take profit? Our take profit was supposed to be down in this candle here, of which price did not come. But immediately after this structure was broken, therefore we had to come up to the last bullish candle before the change of direction. With this candle is highlighted here, what then do you see? We see price coming up, immediately. The time price was going up, we broke another structure. After it broke the structure, we had to highlight this order block here, so, and wait for the price to come into this bearish order block here. As you can see, price traded perfectly into this order block, then it came down. Where was the take profit? The take profit was always at the entry for buy. The take profit was always at the entry for buy in this instance, because the entry for buy was the entry in the bullish order block after price came from the bearish order block. Therefore, the entry of the bullish order block was our take profit. As you can see, price came exactly into it. It traded into it, and then it pushed up. After it pushed up again, accumulation stage. I just want to show you how to make money in accumulation stage. After after price came down here, it pushed up, and then what happened after price pushed up? It broke this structure here. After whenever price break the structure, or what do we highlight? We highlight the last bearish candle prior to the move up. And where's that? Is this one here. Let me move this so that you see. Is this candle here? This is the last down candle prior to the move up. As you can see, price came in exactly and respected it, and then what happened after that? It moved up, and then after price moved up, after we bought here, where was our take profit? Our take profit is always where price ejected, which is up here. So we can see after price came here, if ever we were in the trade, our stop loss would have been down here. But after price reached here, and then our stop loss would have been here, and therefore we trade risk free. Okay. So, but now I'm not in the business to show you how to move to break even and all those things. Okay, so after that, we anticipated price to come and respect this order block. This is an order block on H4. This red zone up here, it's an order block on H4, which price did not come and respect it. So what then do we see? We see price moved down. After price pushed down, where did it come? Which zone did it respect? Look again, this order block here, because this entire move broke all the structures. Okay, this move here broke this structure here, and then again it broke this structure here, and again it broke this structure here. Therefore, the last bearish candle prior to the move up, which is this one here. So if we drag our rectangle to our right, it came in perfect to this area here, and then the temperature was coming up here. We see another structure here. We see another failed market structure here. Can we confirm this a failed market structure? Yes, we can confirm this a failed market structure. Why? Because this high failed to take out the previous high, but it took out the previous low. Therefore, this is a failed market structure. Therefore, we highlight the last bullish candle. After price came to this order block here, then you should have bought freely, and then here was then this area here was your take profit, and was also your entry for a sell, exactly here. Because always after the failed market structure, we see the break of market structure. Always after the fail of market structure, we see a break of market structure. If you do not see the break of market structure after the move up that failed to take out the previous high but took out the previous low, if you do not see the break of market structure, therefore you have to refine everything to another time frame, to a higher time frame than where you are, or to a lower time frame. But I will suggest that you refine everything to a lower time frame from where you are, because that's where you'll see a clear break of market structure. And then in this instance, it's here. Therefore, we expected price to come exactly here, and then it came exactly here. So this was our risk entry, and then this here was our risk-free entry here. This is our risk entry, this is our risk-free entry. So if you want to know about the risk entry and the risk-free entry, please, I'll refer you to the previous videos that we sent here. Okay, so with that said, what then do we see now? We see price came to this order block here, or return to origin RTO, or BEOB, bearish order block here. So where's our take profit? Our take profit is down here. Then here you will have used a bigger lot size, but I'm not advising you how much you should use per trade, how much you should not use. But if I saw this, I would have used a bigger lot size, because this was a perfect and guaranteed move that price will respect here and then come down here. So this is what I saw on V75, and I wanted to show you that there's money in accumulation. You can make a lot of money in accumulation, but first thing first, you have to know if price is uptrend or downtrend. Therefore, that's where you will know when to make money. You have to know if price was in an uptrend or downtrend. In this instance, for example, when you go back to H4, price it's on downtrend. Price is on downtrend, and then when you go to M15, the accumulation phase, it was favoring the bullish, the buy orders only. Accumulation phase was favoring the buy orders only. So as you can see, we have one, 2 and 3 buys, but we only have one sell here. Okay, we have 1, 2 sell, but we have 1, 2, 3 buys, but you have 1, 2 selling opportunities. So overall, guys, I wanted to show you how to make money in accumulation phase, and then I hope you took some notes, and I hope next time you're not gonna miss anything. So I'm on M5 now. Let me go. Let me go back to M15. So you have to know, number one, the bias of the bigger time frame, if price is bearish or bullish, and then uh, this is our daily time frame. Price broke this structure or on a downtrend. Therefore, the big thing that you have to look for is for selling opportunities, and then this down here will be our take profit, and then will be our intra gain, and then our take profit is up here. So should this bearish order block be respected? What we experienced here on in this accumulation phase is gonna happen here on D1. Therefore, we're gonna have some accumulation phase here. We'll have price going from zone to zone. We'll have price going from zone to zone, and then that will be our accumulation phase only on daily time frame. But for perfect entries, you have to go down to M15, even M5 if you can. Then you can enter on M5. Let me show you quickly. Okay, this is the bearish OB, right? we still expect price to come up to this order block up here. So from here up here, it's just one candle on a daily time frame. But what do we see here? We have our sniper entry up here. This the break of market structure, and this candle here, will be our entry, and therefore our stop loss will be just above this dotted red line here. This is where our stop loss will be. So for sniper entry, if ever you scalp, then you can use these opportunities. Okay, so that's what I wanted to show you guys, the secrets of accumulation and the secrets of order blocks, where order block it's hidden in the accumulation, and how to capitalize on that, and what to do whenever price came to your point of interest or area of interest. Do not see this as something that is useless. I do not trade sessions. I do not trade London or Asia or New York, but this is Asia, so I do not trade that. I only trade the setups only if the setups allow me, and then I trade that. And then for more on this, and then I do have a paying group which have Zoom meetings. And to know further about that, there's a link in the description below about how to contact me on Telegram. And then that's all that I wanted to share with you guys. This is some heavy stuff. If ever your mentor shared this with you, then I'm happy that you know what I just said. It was just a repeat. But if your mentor haven't shared this with you before, then ask him or her, why haven't you been told this? And if ever you were told not to trade the accumulation, then here's a proof that you can make money on, say, on accumulation. And then as you just saw, these other blocks were all respected, and then money was made here. Okay guys, I hope I explained everything clear. If you do not understand anything, please feel free to comment on the comment section below. Peace out.